Hello, very good evening. How are you? Good to see you all. Sorry I couldn't come last week. So sorry about it. I'm glad you joined us today. Today we happen to complete our class a little soon, so I thought, why not start off the live at 9 p.m. instead of 10 p.m. So thank you very much for joining us. Yeah, you can like the video, you can share it, and you can invite your friends also to join. Let them know that we are here an hour before. So today we are going to talk about accounting periods, accounting methods, and then inventory. Very interesting and important topics. So for the current batch, we are doing EA Part 2. As most of you know, we have started the business tax sessions, and these were the topics that we were doing. So we thought, why not do a session on this? So, but please do, like the Facebook page, and please keep the notifications on so that when we go live. So normally it should be anywhere but 9 or 10, depending on how the classes are scheduled and my schedule is. So you will have to bear with me on this at 9 o'clock or 10 o'clock. But learning is always there. Yeah. So I'm so happy that you tuned in and you joined us today. So please be with us for the rest of the event. Yeah. Hi Sulba. Hi Alex. Hi Vikrant. Hi Joel. Hi Shravan. Karthik. Hi Karthik. Good to see you, Karthik. Hi Deepthi. Hi Sarona. Okay. Thank you very much. Good. Okay. So this is something on business taxes. So as you know, EA has three papers, right? So I keep saying this every week for the benefit of the students. So EA has three papers: individual taxation, business tax, and then representation. So every week, we do either individual tax or business tax. So we do it on Thursdays. Tuesdays I go live on the LLC. This Tuesday I couldn't do it because the schedule was a little busy. So every Thursday tune in for Academy, uh, and you will be seeing the questions on the enrolled agent examination, which we call it, which the IRS calls it as special enrollment examination. And today we are discussing on part 2, business taxes, right? And as I always say, three papers, and you have 3.5 hours each paper, all MCQs, 100 questions are there, and only 85 questions you need to attempt are valued, of which at least 70 questions you must pass. So the pass rate is also 71%, and iLead gives the best training that is possible to help you become the America's highest tax experts, the highest tax credential from the US Department of Treasury, Internal Revenue Service, enrolled agent. Yeah. So, without wasting much of our time, let's quickly dive into the questions. So, if you have studied on accounting periods, I think this should be a cakewalk for you. Hmm. And pretty easy questions have been put today because accounting period and accounting method itself is a very easy topic. So, take a look at the options. So as you see, it says the annual accounting period used for keeping records and reporting income and expenses is the taxpayers calendar year, tax year, required tax year, accounting year. So I think that's a very straightforward answer. Accounting year, accounting period, it refers to tax year. That's all. Tax year could be any of this. It could be calendar year, fiscal year, required tax year, or anything. But by default, when it comes to tax period, then it is certainly called tax year. Fine. So in this case, the right answer is B, tax year. Yeah. Okay. Try the next question. Okay, so even this question, I think we were doing it this week only. So let's take a look at this question, right? So which of the following accounting changes do not require, okay, the question you see here, it says do not require, right? Do not require the filing of form 3115 to request a change in accounting method. We discussed this even in part 1 when we were doing accounting periods and accounting methods, the very initial chapters, and even in part 2 we start with that, yeah, the basics. So we know here, what do we know here, right? Form 3115 is to change the accounting method. Accounting method, when we talk about, it could be for changing the method of accounting. So as you see the options here, let's look at the options, okay? The first one, correction of a mathematical error. I mean, correction of a mathematical error or posting error. Correction of a mathematical error or a posting error does not need approval of the IRS. It's normally, a book entry. So you just need to adjust it in your books. Uh, Change from accrual method to cash method. Yes, you are changing the method of accounting, the method of treating the income and expenses. You are changing that. So definitely you will need to get the approval. The next one, it says change in the method inventory is valued. Yeah, inventory method. I mean, we discussed, different methods, cost method, lower of cost or retail value method, or, the retail method, lower of cost or market value method or retail method. We have discussed different methods of valuing the inventory. So what inventory method of valuation you are switching to? Yes, you definitely need to file a form 3115. Next one, it says cash change from cash method to accrual method. Obviously, if B is agreed, then D is also agreed, right? If we have said yes for change from accrual method to cash method, then change from cash method to accrual method is also part of it, right? So the only thing that does not require filing of form 3115 is a correction of mathematical error. Yeah, very good. Okay, the next question is interesting. The next question is interesting. I'm sure people who recently did the those partnership accounting methods, they will love this. Don't answer immediately. Please analyze the question. Please take a moment to analyze the question and then submit your answers. Do not be in a hurry to submit the answers. Okay. So I think in the class also, I think I told you this when we were doing. Just a second. Is the question visible to you? Is the question completely visible to you? Yeah. Now, let's take a look at the question. Okay. Fine. So it says the XYZ partnership. Yeah. Yeah. The XYZ partnership is comprised of three partners. Three partners, Sam and Earl, right? And each own 30% of the capital and profits. And Tim owns 40% of capital and profits. Hmm. Now, Sam and Earl each use a tax year ending on June 30th. Hmm. Each use a tax year ending on June 30th. Okay. Tim's tax year ends September 30th. Now, what is the partnership's required tax year? Hmm. What is the partnership's required tax year? Okay. Interesting question, right? So when we are doing required tax year for partnership, yeah, I think many people liked that least aggregate deferral method, right? Then you add this majority interest partners and then principal partners, whosoever had more than 5% interest in the partnership. So in this case, if you see, the question says Sam and Earl together had 30%, I mean, together had 60%. So 30 plus 30, 60%. And their tax year is same, June 30. Only Tim is different. So because majority of the partners uh, have the same tax year ending on June 30, so in this question, the required tax year will also end on June 30 because they are together having more than 50% share, and they become majority. So and also of course they are principal partners because they are individually they have more than 5% share in the company. So Tim is disregarded. So Tim cannot be considered. So the required tax year here will be June 30. Yeah. So D is the right answer. June 30 is the right answer. Yeah. Right. Let's take up the next question. Okay, fine. Yet another interesting question. I think I was telling this earlier also. So let's take a look at this question, right? So when a taxpayer operates two or more separate and distinct businesses, what happens? The same accounting period, same accounting method does not have to be kept for both businesses if separate and distinct books and records are kept. Okay, the same accounting method does not have to be used for both businesses if separate and distinct books and records are kept. Absolutely. I mean, I have two businesses, so if I am following cash method for academy and accrual method for my LLC, I mean, that's absolutely fine. There is no hard and fast rule that for both the businesses I should have the same accounting method. So that's not needed. Next one, the same accounting period must be used for both businesses. That's what I said. It's not needed. Next, the IRS must approve the accounting method. No. When you file your first income tax return, that's when you choose the accounting method or that you want to use for your business. Cash, accrual, hybrid method, whatever. Next, the cash method of accounting must be used for both businesses. No boy, there's nowhere written like that, right? So A is the right answer. Okay, I think for this I just gave you the answer. A taxpayer has adopted a tax year if the taxpayer, let's take a look at the options. If the taxpayer paid estimated taxes for that year, hmm, I mean, what is estimated taxes got to do with the adoption of tax year? Next, filed an application for a EIN, and filing a EIN doesn't determine the tax year anywhere. Filed an application for an extension of time to file a income tax return. I mean, extension of filing an extension of tax return is not filing the income tax return. Both are completely different. Both are completely different. Then filed a first income tax return using that tax year. Absolutely, this is what I told you in the fourth question also. When you file your first tax return, that's when you determine your accounting method or the accounting year that you want to follow. Do you want to follow a calendar year or do you want to follow a fiscal year? So in our case, the right answer is D, the last one. Let's take up the next question. Hmm. Okay. I think we were talking about the required tax year for partnership, right? So when I said required tax year for partnerships, I think these were the three methods that I was referring to. The first one was majority interest partner, right? Uh, and then next one, about the principal partners who have more than 5% shareholding in the company. And then the third one comes the least aggregate deferral of income method. Okay, these three for partnership very important, right? So let's take a look at this. A partnership is generally required to have one of the following tax years. Which of the following is not one of them? Is not one of them. I tell you in the class also. These are the words that we must be emphasizing on. What are they? A tax year common to all of the partnership's principal partners. Absolutely. Whatever is common to all the partners, right? So the earlier example of Sam and Earl also, they are principal partners. They have more than 5% shareholding, and together they are majority interest partners because they hold more than 50% in the company and they have the same tax year. The fourth question, that what we were doing. Now, the same thing, applies here also. Next. B, the tax year of a majority of its partners. Yes, same, acceptable. Then a tax year common to the partners with an interest of 3% or more in the partnership profits or capital. How come? I mean, I just told you that it is 5%. It is not 3%, it is 5%, right? Then next one, the tax year that results in the least aggregate deferral of income method. Accepted. So the odd one out here is C, right? The tax year common to the partners with an interest of 3% or more. It should be 5% actually, okay? So C is the right answer. Fine. Let's take up the next question. Very good. I mean, it's pretty straightforward. Very straightforward question. I mean, if you've followed the class notes properly, then there's a pretty straightforward question. So, which of the following methods is not generally recognized for valuing inventory? Is not recognized for valuing inventory. Which of them are? Retail, it is there. Lowest of cost or market, yes, it is there. Cost, yes, it is there. Constant price, no. They are not recognized for tax purposes. Only those three methods are recognized, right? Retail, lower of cost or market, or then cost. So constant price is not something that is part of it. Fine. Let's get into part 3 on representation, right? So very nice. You were able to do on part 2 accounting periods and accounting methods. Now we go to representation. Okay, so for people who are new to representation, so representation is like, I mean, I told you, right, that there are 3 papers, right? Individual tax, business tax, and then representation. So representation is like client gets a letter, audit letter or something, or you have to write an appeal, represent the client. So he received some notice. So how do you help the client, right? So that's what the representation paper talks about. So it talks about the duties and authorities of an enrolled agent, what you can do as an enrolled agent, right? And the beauty of an enrolled agent is he can represent the client in all 50 states in the United States, right? All 50 states. And that is something that is admitted to practice. He is authorized to represent his clients, right? So that's the beauty of an enrolled agent. Fine. So let's take up some questions on representation. Okay, same, this one also has 100 questions. You have to pass 80. I mean, you'll be valued on 85 questions. Okay, let's take a look. Okay, fine. So you must have, for people who have been in the tax industry, the July 15th, maybe you should have had a tiresome week. So I couldn't come last week. So I think you will be able to empathize, what this question is, right? So let's take a look at this question, right? When must a tax preparer provide a taxpayer with a copy of taxpayer's return? I mean, as preparer, when you should give him a copy of tax return? Upon request of the taxpayer. So if the client doesn't request, you will not give him tax return, is it? So no. First one is no. Next, within 30 days of filing the return, there is no timeline as such. Next, no later than the time the return is presented for the taxpayer's signature. It means immediately the moment the return is presented for the taxpayer's signature, the copy of the return must be made available. So C looks like the right answer. Let's take a look at the fourth one. No later than the time the return is filed with the IRS. Come on, how can you file the return without getting the approval or consent or authorization of the client? You have to get the approval from the client. Normally for electronic filing, we take approval on 8879, right? Form 8879, right? So client also needs to review the tax return before he signs it. So here the right answer is C, right? The third one is the right answer. No later than the time the return is presented for the taxpayer's signature. Fine. Let's take up the next question. Good. Okay. Fine. So let's take a look at this. An enrolled agent who prepares the tax return must always, yeah, must always. First one, sign the tax return in the preparer area, right? Sign the tax return in the preparer area, right? When required by regulations. Absolutely, you got to sign the tax return. Next, furnish an identifying number on any return he is required or permitted to sign. Obviously, you need to have a PTIN. If you are having a firm, then you need to have your furnish your firm's EIN also, right? Your PTIN, your EIN. Next, promptly return a client's tax records regardless of whether there is a dispute regarding payment of fees. Yes, so you have to return the client's tax records. You cannot hold it. You cannot hold it. And then last one, all of the above. So all these things have to be satisfied. So all of the above is the right answer. Fine. So the last question of the day. Let's go to the last question of the day. Yeah, go ahead. I mean, in the examination, if you get questions like these, consider yourself lucky. Yeah, it's a straightforward question, right? Peter, a paid tax preparer, did not receive his PTIN. Okay. Instead of PTIN, can he use his social security number? I mean, if social security number was the tax identification number for a preparer, then all the taxpayers must retitle themselves as taxpayers, right? I mean tax preparers. All the taxpayers must call themselves as tax preparers now, right? A preparer will have a unique identity number. That is preparer tax identification number. The full form of PTIN is preparer tax identification number. So as the question reads, he is a paid tax preparer. He did not receive his PTIN. So if you don't have the PTIN, you can't sign the tax return, right? Instead of PTIN, can he use his SSN? So, no. The answer is straight no. Yeah, okay. A says yes, okay. B says no. C says yes, but must amend the return with his PTIN when he receives it. Crap, no. Then, yes, if the return is for a family member. No, not at all, not at all. B, it's a straight answer. No. Okay, fine. So B is the right answer. I think some people have checked in, many have checked in C as the right answer. No, it's an outright no. No. Okay, fine. So very good, people. You have answered it so well. Thank you very much for your participation. It was a joy connecting with you. And given the current lockdown, we have also revised the pricing structure, and just to fit in the pockets of the students, given the current pandemic. So we have created an option wherein they can choose what they want. So if you need more assistance on this, please talk to our enrollment advisor. You see our WhatsApp number there, you see our phone number, email address, and you can get in touch with our team. Yeah. So it's such a joy to connect with you every week. And currently we are doing our US business taxation session, and that's continuing. So stay connected to us, and please do like and subscribe to our channel, iLead Tax Academy on YouTube also, so that you get all important notification. Okay. So we have so many requests for placing the enrolled agents now, and we are falling short of enrolled agents. So if you're somebody who is still thinking if there's a right course, you need any more information on this, I would encourage you to please call our office, please talk to our team, and our enrollment advisors will be very happy to advise you. Okay, so thank you very, very much for joining today. And just hi Sham, good to see you. Thanks for joining. Hi Yamuna, hi Naresh, hi Suresh, Sarvana, hi Tejaram, hi Zamir, good to see you here. Sadiq Pasha, hi Sadiq, hi Bharadwaj, hi Johnson, hi Anil, hi Mahinder, hello Rajesh Patel, hi Rahul, hi Sai Prasad Wasa, hi Lydia, hi Suresh, good to see you all. Spread the word about enrolled agents. I mean, with so many job openings now, I think it's the right time that you enroll and start studying for the enrolled agent examination. So please don't waste your time, as I say always. Don't waste your time. Time is precious. And we are getting so many business opportunities now. So this is the time. And as I always say, when there's scarcity, the quality dominates. So the question to ask yourself, are you of quality? Can you deliver that value? EA certainly delivers value. For me, EA is always employment. Employment always. Earnings assured. So I wish you all the very best. You have all our contact details right here in the slide. So if you need any help, please feel free to contact us, and our team will be more than happy to help you. Yeah. Thank you very much for joining us, and please, please, please like, subscribe, and if you like this, please share the video also. Yeah. Thank you. I'll see you next week. Good night.